Hey everyone, and welcome back to Channel Vest. Don't forget to hit that subscribe button and the notification bell so you don't miss out on any of our future deep dives. Today we're taking a look at our latest research report, exploring the potential market impact of Donald Trump's return to the White House. Now remember, we don't give financial advice here at Channel Vest. We just share our research and insights to help you on your own investment journey.
Exactly. Consider this a starting point for your own deep dive into these stocks.
Okay, so let's set the stage. Trump is back in the White House, and some of his signature policies like deregulation, his America First manufacturing push, and his pro-energy stance could create a really unique environment for certain companies to thrive. In fact, we've pinpointed 6 stocks that we believe could benefit from a Trump presidency.
And we're not just talking about the policies themselves,
Right.
but also how these policies could potentially reshape entire industries, creating some really interesting opportunities for investors who know where to look.
Absolutely. So let's jump right in, starting with number 6 on our list, Thermo Fisher Scientific, TMO, for those watching at home. And this isn't your average healthcare company. Thermo Fisher is a true giant in the field. They're involved in everything from lab equipment and diagnostics to cutting-edge research.
You know what's really interesting about Thermo Fisher? Back in 2020, during the pandemic, their revenues surged by a whopping 26%. The demand for their products went through the roof. Now imagine a scenario where deregulation under a Trump administration fuels even more growth in healthcare and research.
I'm starting to see the potential here, and what's even more interesting is that their stock is currently trading at a 12% discount. It's like finding a hidden gem just waiting to be discovered. Okay, moving on to number 5 on our list, we've got Mondelez International, or MDLZ. Now, this one's for all you snack lovers out there.
Think Oreos, Cadbury chocolate, all those iconic brands are part of the Mondelez empire.
Exactly, and here's what makes them so interesting in a Trump economy. They've got a really strong U.S. presence and a knack for managing costs effectively.
Which is super important in a potentially volatile global trade environment.
Right, because even with the uncertainty around trade negotiations and tariffs, Mondelez is well positioned to weather the storm. Plus, their stock is currently trading at a 12% discount, and they offer a steady 2.8% dividend yield, which could make this a sweet deal for patient investors. Okay, on to number 4, Kraft Heinz, better known as KHC. This one's all about those classic comfort foods. Mac and cheese, anyone.
Now imagine a scenario where Trump's tax cuts put more money back into the pockets of everyday Americans. What happens? People have more spending power, which means more money for Kraft Heinz products.
I like how you connected that back to the average consumer, and it makes a lot of sense. People might cut back on luxury items during uncertain times, but they're always going to need to eat. And Kraft Heinz offers those affordable, familiar brands that people turn to time and time again. Plus, with a massive 41% discount and a 4.9% dividend yield, this stock is practically screaming, "Buy me."
It's definitely tempting. And it aligns perfectly with Kraft Heinz's current strategy. They're focusing on streamlining their operations and becoming more efficient, which could be a winning formula in a pro-growth Trump economy.
Okay, let's move on to number 3, Bristol-Myers Squibb, or BMY. Now, this one's in the pharmaceutical space. And we all know drug pricing can be a bit of a roller coaster, especially with all the talk about healthcare reform under a Trump administration.
That's true, but what makes Bristol-Myers Squibb stand out is their impressive drug pipeline. They're constantly innovating and developing new treatments, which gives them a competitive edge, even if drug pricing becomes more unpredictable.
So they're not just reacting to the market. They're actively shaping it. And with a 14% discount and a 4.4% yield, BMY could be a smart play for investors who are willing to tolerate a bit of volatility. All right, you ready for our number 2 pick?
Absolutely. This one taps into a theme that I think will resonate with a lot of viewers. Energy independence. We're talking about Devon Energy, or DVN, a company that's primed to benefit from Trump's pro-energy policies.
You know, deregulation and incentives for oil production.
Exactly. Those policies could be music to Devon Energy's ears.
And this isn't just any energy company. They have a unique variable dividend policy.
Meaning that their dividend payouts can fluctuate based on their earnings.
So if the energy sector booms under Trump, investors in Devon Energy could see some really nice returns.
It's a bit more dynamic than your typical dividend stock, which makes it even more intriguing. And let's not forget, their stock is currently trading at a 19% discount.
Okay, I'm on the edge of my seat here. What is our number 1 pick? The stock that we believe could be the biggest winner in a Trump economy.
Drumroll, please. Our top pick is Bio-Rad Laboratories, or BIO, and here's why. Trump is all about American science and manufacturing, right? Well, Bio-Rad provides essential tools and technologies for life science research and clinical diagnostics. These are fields that are ripe for growth under a Trump administration.
Okay, I see where you're going with this. But you mentioned something called a razor and blade business model. Can you explain what that means?
Sure, it's actually a really clever strategy. Bio-Rad sells equipment, kind of like the razor, but then they generate ongoing revenue from the consumables that are needed to operate that equipment. Those are the blades.
Ah, I get it. So it's not just a one-time sale. They're building a loyal customer base that keeps coming back for more.
Exactly. It's a brilliant way to create recurring revenue.
And with a 14% discount and a recent 40% surge since July, Bio is definitely a stock with some serious momentum.
It's definitely one to watch. But as with any investment, there are risks involved.
Which is exactly what we'll be diving into in part 2 of this deep dive. So make sure you stay tuned because we'll be unpacking the potential downsides and challenges associated with these 6 stocks. Don't forget to subscribe to Channel Vest and click that notification bell so you don't miss the rest of this exciting deep dive.
All right, so we've talked about the potential upside of these 6 stocks in a Trump economy, but let's be realistic for a moment. No investment is without risk, and it's important to understand the potential downsides just as much as we get excited about the potential upside.
Absolutely. It's all about making informed decisions. And that means looking at both sides of the coin. So let's dive into some of the challenges these companies might face. Started with Thermo Fisher Scientific, TMO. You mentioned that their revenues surged by 26% during the pandemic. But can they sustain that momentum now that things are starting to return to normal?
That's a really good question, and honestly, it's one of the biggest risks with Thermo Fisher. The pandemic created this huge surge in demand for their products, and it's hard to say how much of that demand will stick around in the long term. Plus, we can't forget about the competition. The healthcare sector is constantly evolving with new players emerging all the time, and that could put pressure on Thermo Fisher's market share and pricing power.
So even a giant like Thermo Fisher isn't immune to market forces. Okay, let's move on to Mondelez, MDLZ. We talked about the potential impact of trade wars and tariffs. How big of a threat are those factors really?
Well, Mondelez relies on a global supply chain for a lot of their key ingredients, things like cocoa for their chocolate products. And if trade disputes escalate or currency exchange rates fluctuate wildly, their costs could go up significantly, which would eat into their profit margins.
It's like a domino effect. One disruption can trigger a chain reaction throughout their entire business.
Yeah.
Okay, shifting gears to Kraft Heinz, KHC. They're a bit more U.S. focused than Mondelez, but
Yeah.
what are some of the challenges they might face?
I think their biggest hurdle might be changing consumer preferences. People are becoming more and more health conscious, and they're looking for healthier organic options. Kraft Heinz is known for their processed foods, and they need to adapt quickly to this shift in consumer demand, or they risk being left behind. Plus, they're carrying a pretty hefty debt load, which could limit their ability to invest in innovation and respond to these evolving market trends.
So it's not just about external factors like politics and economics. It's also about staying relevant to the consumer. Okay, let's talk about Bristol-Myers Squibb, BMY. We already mentioned the volatility of drug pricing, but are there other risks that investors should be aware of?
Definitely one word: patents. Pharmaceutical companies rely heavily on patent protection for their blockbuster drugs. But when those patents expire, generic competition floods the market, and their revenue can take a major hit. BMY has some key patents expiring in the next few years, so that's something that investors need to keep a close eye on
It's like a ticking time bomb. They need to keep innovating and developing new drugs.
to stay one step ahead of the competition.
Okay, what about Devon Energy, DVN? We were pretty excited about their prospects in a pro-energy environment.
Rightfully so. But it's important to remember that the energy sector is notoriously cyclical. Oil and gas prices are influenced by so many different factors: global demand, geopolitical events. And these fluctuations can have a big impact on Devon's earnings, which in turn affects their variable dividend payouts.
So that variable dividend is a double-edged sword. High potential rewards, but also the possibility of those payouts shrinking.
Exactly. And then there's the whole issue of the global shift towards renewable energy. While Trump's policies might favor traditional energy sources in the short term, the long-term outlook for companies like Devon is a bit more uncertain.
It's like navigating a changing landscape. Short-term gains might be tempting, but long-term sustainability is what really matters. Okay, last but not least, let's talk about Bio-Rad Laboratories, BIO. They seem to have a lot of potential in a Trump economy.
They do, but even a company like Bio-Rad with their razor and blade model
Mhm.
faces potential challenges.
Like what?
While the healthcare and life sciences industries are heavily regulated,
Mm.
any changes to those regulations, whether domestically or internationally, could have a significant impact on their operations and profitability.
Right, and their razor and blade model.
Yeah.
While it's a brilliant strategy, does create a dependency on the continued demand for those consumables?
Exactly. If that demand were to falter for any reason, their revenue could take a hit.
So there's always a flip side to every coin.
Exactly. And they also need to keep innovating to stay ahead of the competition. The life sciences industry is incredibly competitive, and new technologies are emerging all the time.
I'm starting to see the bigger picture here. It's not just about blindly following the latest trends or political developments. It's about understanding the nuances,
Mm.
the risks, and the long-term outlook for each of these companies.
Couldn't have said it better myself.
So are you ready to shift gears a bit and talk about how to approach these potential investment opportunities?
Absolutely. Let's move on to part 3, where we'll put all of this information into context and discuss how to make smart, informed investment decisions.
All right, so we've covered a lot of ground here. We talked about the potential upside of these 6 stocks, and we also dug into some of the risks involved. So where do we go from here? What does all this mean for you, the investor watching at home?
Right, that's the million-dollar question. It's easy to get caught up in all the excitement, but it's important to remember that the market is always forward-looking. A lot of the potential impact of Trump's policies might already be baked into these stock prices.
Interesting. So you're saying the market has kind of anticipated these changes already?
In a way, yeah.
Yeah,
The market is constantly trying to predict the future, so don't expect to get rich quick just because of who's in the White House.
that makes sense. So how should investors approach these potential opportunities then?
Well, first and foremost, you need to think about your own investment goals, your risk tolerance, and your time horizon.
Right, it's not a one-size-fits-all situation.
Exactly. Are you looking for short-term gains or are you in it for the long haul? Once you have a clear understanding of your own investment style, you can start to narrow down which of these stocks might be a good fit for you.
And of course, diversification is always key.
Absolutely. Don't put all your eggs in one basket.
Right, spread your investments across different sectors and asset classes to help manage your risk.
That's the smart way to play it. And perhaps most importantly, do your own research.
Right, don't just take our word for it.
Exactly. Dig into those financial statements.
Mm.
Read industry reports. Talk to other investors. And really make sure you understand the companies you're investing in.
Knowledge is power, as they say.
Couldn't agree more. And one final thought. Investing is a marathon, not a sprint. There will be ups and downs along the way. But if you stay focused on your long-term goals and you do your due diligence, you'll be well on your way to building a successful investment portfolio.
Great advice. And as always, we have to remind everyone that we are not financial advisors. This is just a starting point for your own research. The decisions are ultimately yours.
Exactly. We're here to provide information and insights, but it's up to each individual investor to make their own choices.
Well, I think that about wraps things up for today. Thank you so much for joining us in this deep dive into the potential market impact of a Trump presidency.
It's been a pleasure.
And don't forget to subscribe to Channel Vest and click that notification bell so you don't miss out on any of our future deep dives. We'll see you next time.